Trust. Not trust in headlines, not trust in politicians, not even full trust in the dollar. Trust in something they can hold. Walk into any coin shop this year and you'll see it. Regular people, young couples, retirees, first-time buyers, all asking the same question. How much for silver today? This isn't happening randomly. Over the past few years, Americans have watched inflation eat into savings. Groceries cost more, gas costs more, housing costs more. Even basic services feel heavier on the wallet. When purchasing power shrinks, people look for protection. Silver has always played that role. Before 1965, U.S. dimes, quarters, and half dollars were 90% silver, real metal, real intrinsic value. If you held a quarter in 1964, you weren't just holding 25 cents, you were holding precious metal. That changed when the U.S. removed silver from circulating coins. Since then, most coins are copper and nickel. The metal value is almost nothing. But older coins still exist. Coins like the Washington quarter dated 1964 or earlier, the Roosevelt dime before 1965, the Kennedy half dollar from 1964, which contains 90% silver. These coins aren't rare treasures worth millions, but they contain real silver. And in 2026, that matters. Why now? Because Americans have lived through massive stimulus spending, rising national debt, banking scares, volatile markets, and digital asset swings. They've seen how quickly things can change. Stocks can drop 20% in months. Crypto can swing 30% in days. Banks can freeze accounts during crises. But a silver coin in your hand? It doesn't crash overnight. It doesn't depend on a password. It doesn't require Wi-Fi. That physical certainty is powerful. There's also a supply reality. Silver isn't just a money metal. It's used in solar panels, electric vehicles, electronics, and medical applications. Industrial demand has stayed strong. At the same time, mining supply hasn't exploded. When industrial demand rises and investor demand rises at the same time, pressure builds. And in 2026, investor demand is clearly rising. Online bullion dealers have reported increased sales of silver American Eagles. Coin shops have seen tighter inventories. Premiums, the extra amount you pay above the raw silver price, have fluctuated because physical supply doesn't always match sudden demand spikes. That's another reason people stack coins instead of paper silver products. You can buy silver ETFs, you can trade futures contracts, you can speculate on mining stocks, but stacking is different. Stacking means you physically own the metal. No counterparty risk, no brokerage dependency, no digital ledger. Just weight in your hand. There's also an accessibility factor. Gold is expensive. 1 ounce can cost thousands of dollars. That price point limits participation. Silver is different. The entry cost is far lower. An average American can buy a single silver coin without stretching their finances. That makes silver psychologically approachable. It feels achievable. You don't need to be wealthy to start stacking. And then there's generational behavior. Younger Americans have grown up through the 2008 financial crisis, pandemic-era stimulus, rapid inflation, and crypto volatility. Many don't have blind faith in traditional systems. They diversify differently. Some hold digital assets, some invest in index funds, and some quietly stack silver. It's not about betting everything on metal, it's about balance. There's also a mindset shift happening. For decades, Americans were trained to think in purely digital terms: online banking, credit cards, investment apps. Money became numbers on screens. But recent instability has reminded people of something older. Tangible assets feel safer during uncertain times: land, food storage, precious metals. Silver fits neatly into that category. It's small, portable, recognized worldwide, historically trusted. And unlike collectibles that rely purely on sentiment, silver has both monetary history and industrial necessity. That dual demand gives it a different profile than purely speculative assets. Now, let's be clear. Silver stacking in 2026 is not about panic, it's about precaution. Most stackers aren't predicting collapse, They're hedging, they're preparing for volatility, they're building optionality. If inflation cools, silver still has industrial demand. If inflation rises again, silver often benefits. If markets swing wildly, silver offers diversification. It's a strategic move, not an emotional one. And here's the interesting part. Many Americans stacking silver today aren't loud about it. It's quiet accumulation. A few coins each month, a small percentage of savings shifted into metal, a growing stack in a safe. Slow, steady, intentional. So why are Americans stacking silver coins in 2026? Because inflation changed how people think, because volatility changed how people invest, because physical ownership feels safer than digital promises, because silver is affordable compared to gold, because history shows precious metals survive economic cycles. It's not hype, it's a response. And whether silver skyrockets or moves slowly, one thing is clear. In a world of uncertainty, many Americans feel better holding something real. And in 2026, that something real is often a stack of silver coins.